All right, live once again with Mark Dewey. We have a surprise guest coming up, but it's a surprise because he doesn't know that he's joining us. He's just going to join a meeting, and we're going to be live.
He and I have been trying to do a podcast like all 2025. We kept talking about it and what's the name and all this kind. Now I'm just like, we just got to do it. So when you said you're going to just have a call, I'm like, let's just bring him in. Let's just start riffing.
So once he gets here, we'll bring him in. But he'll be surprised. And Mark and I have been planning this for a long time. We've just about 15 hours ago, we decided to do this. So
once again, if you watch the last one, it's just going to be a bunch of rambling. You probably won't learn anything.
So, Mark, I wanted to dive into something right off the bat here. We were talking about, but I wanted to have this discourse for a broader audience. So,
why do I wear the Patagonia vest all the time?
Exactly. We have all of them. I saw the Sora video where you just kept taking them on.
It's the only thing that hides my dad bod growing. No, go ahead. Sorry, go ahead.
All right. So banking as a service, we were just talking about like these embedded finance. But like banks that go all in, like if they scale up too much, they actually, you know what? Our special guest just got here. We're gonna come back to this, and there's something there. So if I forget, remind me.
I'll remind you because it's super important.
Here we go.
How special?
All right, Tony.
What kind of special, Steve?
Did you hear us? I didn't know. All right, we're live. We were already recording. We got Mark Dewey and Tony Smiley Face.
All right. Well.
So we were gonna just blindside you, but yeah.
Tony's trying to change his name right now. He's like, "How can I get it to look my last name old professional?"
No,
I actually like it.
That's how you know I'm not some agent or AI.
That's actually it's a good idea. All right, sorry, Steve. We're taking you off the rails already.
No. Well, it's kind of a pro tip on LinkedIn. I used to put a little icon, like you use like the whatever in front of your name, and I had a star in front of it previously, and the bots would be like, "Hi, star," and you'd reach out to me like, so you'd always know if it was a bot or if it was real if they use stars.
That's a great idea. I'm gonna use
anyway,
I stopped putting real stuff on LinkedIn because it never got any.
Yeah, that's a great idea.
All right. So Tony is the third musketeer. We all have a lot of crazy and fun conversations. Tony, I'll be interested in your take on this as well.
Please.
But we were just talking about if embedded finance, when they scale up, you have to keep your eye on the ball. Otherwise, you can go sideways really fast, like we've seen with like Synapse, Evolve, and some other banks as well. My question, and I go back and forth on this. So, I've been saying for years that embedded finance is the future of community banking. And I can make an argument both ways, but like the easy answer is there's only going to be a few banks that do embedded finance. There's only going to be a few banks that survive at the end of the day. The U.S. looks much more like Europe than it does the 9,000 financial institutions, 4,500 banks that we see today. I think back to what we initially talked about. We're not going to have 9,000. We're not going to have 4,500. It's going to be a much smaller number, but I still think it'll be in the thousands. But it's going to be the embedded finance programs that don't scale. I don't know what that magic number is. And some of it's going to be the complexity of the banks. But like, what are your guys' thoughts, Tony? I'm just going to put you on the hot seat. Like, embedded finance. Like, how many banks does the world need to support that infrastructure? Is it truly the future of community banking?
Wow, that's a loaded question. So I will say this, and it's a hot take and likely controversial. As many as the regulator will allow.
Okay.
Be my answer. The next on that is, I believe they've already decided on how many.
Yeah.
Oh.
But you know, whatever the regulator, yeah, that's
We're
second
playing
one.
with a stacked deck.
We're-
That's
We
just
have,
why-
we have to go underground in the dark web to talk about that second point. But the first point is, yeah, okay. In the world of regulations, like, yeah, I get it. But then you got like what happens when, you know, private credit and all these other, call it shadow banking, call it whatever you want, you know, they start adapting into what does that look like? You know, they start embedded finance for. Does that even work? Maybe it doesn't. I don't know. But for
Well, back in the day, we used to call that loan sharking. But you know, we're
well, it's capped at 10% now. You can't even get done.
Yeah. It's a valid point, Mark, because you have, it's not something that's talked about very broadly, but those hard money lenders that are lending to small businesses that are a cash crunch, like they are the predatory lenders, and they're charging these extreme interest rates, and they're not regulated the same way the banks are. So are they going to have banking as a service sort of like embedded lending? And I think you see that somewhat already in that world. But
You know, look, I don't think we can call them predatory lending because, look, I know a lot of entrepreneurs that are in tough spots. They know what's coming, right? And if they can get it something that's at a high, even if it's at a high rate or whatnot, you know, there has to be something out there for that. Like it, you know, I think, yes, it's predatory because not everybody's educated, but everybody needs to get educated. So, but those products need to exist. Like,
Okay.
So,
well, I can take all sides of that thing, guys. You know, so let's say you're a startup or a bank and you want to get into this next thing, but there's not a lot of the right people to do that thing, and let's just say they command a high premium. Is that predatory rate salary, right? I mean, if you want that thing done, we've done it before. I've done it before, not me, but you know, let's just say how that goes down. My price is blank an hour, or right. Or turn it around. Maybe it's like CDs. CDs is on the other side, right? You're paying a high rate of return, and you know that's going to, you know, you got to pay the piper on hot money, right? So I think it depends on your perspective, right? And so, you know, and some people are willing to take risk, and some people aren't.
And so, if I understood Mark correctly, what he really said is it's not predatory lending. Like, as long as if you understand what's going on, even if there's a gun being held to your head, it's not predatory because you understand what's going on. I'm joking, Mark. There's a
Well, I mean, you're calling it predatory, but sometimes that's the circumstance that you're in.
I mean,
You're making a trade.
Yeah.
Yeah, no, I get it. Like by having the product out there, you know, people use it and they abuse it. You know, we had the line of credits in our venture funds, you know, tied to the subscription docs that, you know, some people would use for additional leverage to play the IRR game, and others would just use it to, you know, get into a good deal quickly because they knew they had legitimate LPs behind them to pay it off, you know, within 120 days is what First Republic used to give us. So, you know, it wasn't cheap, but it was fast and it got the job done. So, you know, I could see both sides of it. People, you know, even the educated ones are going to take advantage of it. Somebody's going to figure out ways to game the system in some way. So,
I mean, at the end of the day, they're charging a higher premium because it's higher risk. Like it's risks, and so
yeah, that's it. Yeah,
and if you are in a position where you need fast cash, your opportunity needs to have a greater return than the rate you're paying, right? That's simple math.
So look at embedded finance. It's going to be everywhere, right? It's already, you know, it's already in the buy now, pay later world and built into your, you know, POS systems. It's, you know, it's going to be, you know, embedded finance. Like we shouldn't just be talking about banks and credit unions here. I think it goes to like anybody who's tapped into them. Like how are we going to do embedded finance for your Ethereum or your Bitcoin? Or Tony and I were talking about getting back into gold and silver.
Oh yeah. I want
hard metal.
Penny. I want to buy all pennies in the United States.
I want embedded finance for the hard metals.
I started getting some pennies in my collection already. So
telling you. Yeah, we'll buy them 3 to 1. So
before my banks shut me down on getting the hard currency,
data centers will be buying that off you pretty soon, man. So yeah, Coinstar is going to be like,
what are they going to do?
Yeah, not Coinstar could just be taking all the pennies and selling all that over. Anyways, I don't know.
I think the takeaway is that like embedded finance is not just banks, which makes like there are these other providers that are continue to do it, and that's what makes it so pivotal. The banks are looking at it to define what their strategy is to survive in the future.
Yeah, but let's go back to what we were going to talk about, like right when Tony jumped on.
Right. Okay. I screwed you.
No, because it was perfect timing because I know you don't agree with me often, but I think here we might be able to common ground. It's the fact that this is going to be so big. It's going to, like, you look at some of those who had the embedded finance, programs, and they grew really fast, too fast. And good management teams got caught off guard because you just can't keep track of where the money's going, like unless you've got really strong rails, regulatory. And now with AI, you can use it to, in real time, see where things are going. And, your chief risk officer or whatever can get a text when something goes off the rails. But it's more important ever to start with that before you jump into something and it's off to the races. So that's what we were talking about when you first jumped in, right?
Yeah. It was.
I'll jump in somewhere. So you guys keep talking.
No. But Tony, we'll take I think it's going to be, it's big now. It's going to be even bigger. And whatever it is now isn't necessarily what we all think it's going to be next year. It'll be something maybe even crazier the way the world's going. So, yeah.
Yeah, I think in order to, at least in my opinion, or if I were in North Dakota or Minnesota, I'd say in my opinion, you have to shift the centricity from the bank being the thing that enables you to now the person who owns their data enables themselves. And once in my opinion, once you understand that, it changes how you approach the world.
Okay, sorry, I had to Google centricity. So you gotta say that to me like I'm a 5-year-old. One more time.
Back in the day, right? Browsers. The reason why there was a fight on the browsers because it was a fight for centricity and focus, right? Where you started,
yeah.
Right? And then mobile had the centricity,
yeah.
And so now, given the rate of adoption for agents, I see a world where I actually start with my agent first.
Yeah.
Right.
Yeah. So, but wait, back up 1 second. So the fact that you said something about like, okay, I control my data or something in there.
Yep.
Right.
I'm in control. It is sovereign to me. It is the law.
So my wife is more organized than I am, right? She's got everything all in one place, QuickBooks, blah, blah, blah. And so you're saying, then you just take that and you like start with the agent, right? Like, here's what I look like, strip out, whether I'm a male or female or whether my race or whatever, strip out some of that stuff. But like, here's my data.
Well, here's a great title to an article that Steve Bishop might write. And he might say, oh, so you think that's a human logging onto your digital banking app? So we have to optimize to where the channel is going and not where the channel was. Right? The channel was, I assumed that the person was logging in and the person was making decisions. Now I'm going to pull in that data and say, help me understand what decisions I should make. Right? So
every call that I had with Wells Fargo today on another subject, which was
I can't.
absolutely frustrating.
Yeah.
I could have had an agent basically interact with that customer service
Mhm.
and stay on hold for 45 minutes and get 99% of what we talked about done.
Yep.
I wasted 2 hours. I would have loved to have my agent who has all my data, who knows the problem, go and have a conversation to fix this stuff, or to fix my credit, or to fix my.
It's either an agent or an agent.
Yeah,
You know?
but Tony, when you said something, we need to design the system for where we're going, not where we are.
Yes.
You know, it was like 2 years ago, maybe 3. It wasn't very long ago. Like I was at Finovate, and there were multiple people that presented on stage and said, "My voice is my password," and that doesn't work anymore because deepfakes can now have your voice. Like so, that was designed for the world we were in,
Yes.
not where it was going.
Correct.
And so,
Yeah.
like
I saw
having the agentic, I think you have to design it, but at the end of the day, there's still going to be the regulatory pieces the
Correct.
banks have to focus on, and that compliance is going to rule the day.
And I think it might more look like governance around the transmission, the repositing and transmission of the other asset that we keep on deposit for our customers, which is their data. Right? We have 2 things that don't belong to us in banks: deposits and data. Right? And of course, we own the metadata. And what does that mean? Oh, I know when you logged in, but I don't own the transactions that you undertake, right? And all of that around. And so, yeah, it could be frustrating because, you're at a device and you're logging into your app, and you have device level controls, which says that you have access to the platform level controls. How many times have I put my face and then give him my app to my wife? So my push is, so you think that's the person, because sometimes you have an agent, right? Your bookkeeper logs in for you. You give your bookkeeper power of attorney, your account, but all the time you're basically giving, so in banking terms, right? You're giving right of agency.
But it's so frustrating. It's like, how many more questions do you need to ask me, right? What's your dog's name? What's your mother's maiden name? And like, all that information lives out there on the dark web somewhere. Like somebody's got a deep fake of me. They copied my Sora, my annoying Sora videos.
Yeah.
And it's just like, so, so how do we go the other way? How do you just make it like so easy where it's all doing that in the background? I just want to call up. I want them to know it's me, and I want to get to business.
Do you really want it that easy?
I do, but I want to know that what's going on in the background is triangulating where I am, what my spending is. I want to have that confidence that it's doing it all behind the scenes. And all I get is this green thumbs up on my phone that says, or whatever on my, or Ring or wherever we go, that says, that it's not being hacked or something like that. I kind of do want it that easy, but I want to know that it's in the background that something's happening.
Yeah, but
if we're not going to have the brick and mortars, like we're not going to bring those back as like, oh, you have to come in to bank. I think we can agree that that's not going to be the case. Then,
or will it?
Well,
do we get aggressively human? Is my new concept.
No, I think. Well, again, for those 15 years ago,
I didn't mean to cut you off, Steve.
No. Then stick with their with their real estate, right? But then again, when you walk into a branch, you have to have some sort of ID, right? So this is the problem, guys. Like, do they really know that when I walked into a bank yesterday and said transfer money, it was me?
Yeah.
I mean, or like is there a scammer that's telling you to take that money and then put it in the crypto ATM? I was just reading another story this weekend about somebody who that happens. The challenge has always been the weak point in technology for security is human. You saw how many times you've seen a password written down on a Post-it card. They post a note like, yeah, that, and we're not even past that. But I don't know about you guys, but I know I've been guilty of using the same password or maybe one password on all my things.
Nice.
And like,
Nice, Steve.
yeah, I would rather have ease of use over, like, I value that almost more than security, which, I mean, it's a balance, right? Like that customer experience versus security. And how do you, in an increasingly insecure data world, how do you have something that still maintains a good customer service?
But I think, go ahead, Tony.
No, go ahead.
I can see a really good thought spinning in your head.
No.
I'll let you marinate on it for a second. But I think it's whatever's being talked about at CES or, any of these conferences, it should be the exact opposite. Like what you started saying is like, oh, well, it's not going to be at the branch anymore. And I think like, I don't know. I mean, maybe it's some form of back in person, and then, you only do banking with a trusted friend or something like that. Like Tony and I have to shake hands in person for my money to move. I don't know. Like, I think it's just, I doing this long enough. It's like the tech that we have implemented to prevent all this stuff just amplifies the more that we have to do. Because, the bad guys get smarter, then we get smarter, and the bad guys get smarter. So maybe we just got to go the other way. And then you'll either have your Mercuries and you want to be that tech forward guy, or you'll be like me on my ranch in Mammoth, who, wants to just shake hands with the local banker and
he rides his horse to the local ranch.
Yeah. He's got to come out in his horse and wagon, take my gold and silver back to the.
I think there'll be a lot more to exchange. There'll be much more or many more things to exchange for value than just money. Right? As we perceive money today. Okay. And so, we trade wisdom all the time in lieu of these things. Right.
Yeah.
But there likely be a system by which, God, what was that company? Mark and Steve, do you remember there was a company based upon bartering? ubarter.com. Does anyone remember ubarter?
No.
Yeah.
It was a marketplace for trading. So and it started small, like in services, like I'm a handyman, I'll come do this. And then someone else says, oh, I'll give you, I'll bake you muffins. Who knows?
Yeah.
There was a fair trade. Because back in the day, if we were just talking about made human, people exchanged their own personal services. The blacksmith for blank.
Look, I grew up, we were poor. And my mom, to raise two kids by herself, was like, she bartered all the time. That's how we lived in Great Mammoth. It was expensive, but she was a bookkeeper. So she did the restaurants books. Man, us kids ate like kings. She did the auto mechanics books. Mm-hmm. Car was always running. She helped the guy who did the firewood. So our house was always warm. It was always bartering, right? I'm surprised we don't do more of that. So bring that app back. So
I think we actually do it, but we're not formalizing it in a way like it happens informally.
Yeah, it happens informally,
but it just doesn't, like, it's not visible to you, right? And it's not explicitly right now. We trade our time for something that I can put in a bank account where I can account for it. But no one says, I did this favor for you, and now here's my favor bank. Oh, here we go. Favor bank.
Better grab that .ai.com. He's on GoDaddy right now.
Either my agent or my Asian is going to.
Yeah. No, but it is. Well, because look, coming back to this all, like at the end of the day, no matter if we go forward with tech or backwards in time, like I want, it's still going to be all about community. It's going to get aggressively human. You know, we're going to do, you know, what I love so much about First Republic Bank and Silicon Valley Bank in the really early days. Like they were helping us do our pitch deck for our first fund and introducing us to deals and going to networking events. It was all about community. And as we succeeded, so did they, right? So whatever it is next, it's going to be even more about community than ever. But it's going to be like, act local, but think global type of community, right? So,
and I can, like, is the community bank that is in all about community for their history, are they better positioned for the community of the future, or is it neobanks that the regulators just keep running these new charters? Like, is that new community better served by the existing players or by new players?
I think there's room for both. I say pick your lane and be what you want to be, right? Like,
I actually think the winner is not a bank.
That's because you've been in credit unions and they don't pay taxes.
No. Here we go. We got listen. I got tattoos on both arms. Okay. And then I have one in the back because I'm like systematically important at Wells Fargo, and then I've got credit unions on my left arm, and I've got community banks on my right arm. Right. I probably have a tattoo from Bass too, Steve, from banking as a service. Again, I'm going to go back to something I said kind of earlier, which is we keep thinking that the world starts with the institution, and it actually starts with the person, right? And because now the capabilities and the law is on the individual or the business side having their basic data sovereign to them, right? They got all the leverage. Give me all my money. Please tell me, like, do you think there's not a world, Steve or Mark, that I can't request where all my data, where is it stored, how was it utilized, who last saw my data, and who did you share it with?
I think my view is slightly different. You say it's not a bank or a financial institution. I think the front end is not a bank or financial institution, but there's still going to be the cops that are overseeing the compliance. That there's still going to be banks that are looking, overseeing, making sure AML, BSA, KYC, KYB, all the alphabet, like those functions will still exist. Otherwise, it's a free for all. And so
it'll evolve. It'll exist, but it'll evolve.
I think you misunderstand what I think. Banks will exist. It's how I interface with the bank will be different.
Okay. Yeah.
Yeah. And I agree on all sides of this three squares here. But
you actually,
look, at the end of the day, there's going to be A, B, and C, right? There's customers for now, eventually we might get to the far right, but for now there's going to be customers for these non-digital focused banks, and they'll probably be around. It might shift a little bit, and then the fintechs will continue to be the fintechs, but yeah, I don't, what does that look like in Tony's world come 5 years from now? Maybe.
Yeah. I think there are technology companies who are into finance, and there are finance companies that use technology, right? And so I think the real fintechs are actually the institutions who are figuring out how to leverage technology. And so, am I alone in that thought? I think I've only really heard that from a couple other folks. And they've said it like maybe 6 or 7 years ago. I probably latched onto it and I can't remember who, but, and again, it's about when you think about who thinks themselves as the most important. And I've been a part of a ton of projects, even just in the last year, where like, oh, this is easier for us. And then you'd ask the question, oh, is it easier for us as an institution or easier for our focus, our member, or our customer? And they're like, oh, we never thought about it that way.
Hey, so Tony, Steve and I got in a massive fight on our last podcast.
Oh, all right, here we go. let me allow me to mediate.
I threw out that banks can now, because of tech, banks can now go back to building their own stuff in house.
Yes.
They could just vibe code whatever international payments.
Yeah.
Steve was like, "Oh, no way!" And I was like, "Oh," and then we like shut our laptops.
Yeah. Abrupted.
So what do you think? All of this we're talking about. Can a bank just now vibe code their way into their own, BaaS?
Well, let's ask the first question. Are by way of regulation today, are banks and credit unions required to be SOC 2 compliant?
Yeah, but I mean, can't you get
SOC 2?
I think they should be. They are. They should SOC all the
right.
SOCs.
Should
SOC, they SOC 1, SOC 2, SOC?
Are they are two different answers. So
yeah, no. Is it by regulation? Are they stipulated to be? Are they required to be SOC 2?
The vendors, the critical vendors for financial institutions, are required to be SOC 2 compliant. The bank themselves are not.
Okay. So me as a user would like my bank to be SOC 2 compliant. So I'd like to see their SOC 2 bridge letter.
Yeah, but can you vibe code your way to SOC 2? Do I have to go spend $250K on some guy?
Why not?
And what level of SOC 2? Because there are different levels, right? There's
what would you advise?
Order by mail SOC 2, right? That you do.
Yeah. I'm just saying. I think I watched this, kid the other day vibe code the entire suite of Microsoft in 3 days. He built Excel. He built Word. He built everything, and it was ugly, but it was basically it, right? And so I'm all of a sudden seeing where he calls them the three wizards, right? And he can code them. He can say, Claude, talk to Grok, and you guys either agree or disagree, and make Microsoft cry and build this. And then at the end of the day, all the wizards come around and they're like, here's your. And so now can somebody basically build inside of their, rather than paying X, Y, and Z a bunch of money to build it, like they can start building their own stuff again. I don't know if we're there quite yet.
Did they ever really build their own stuff? But
they haven't before, but I'm thinking they have.
They did.
Well,
a long time ago, banks built their own core platform.
Yeah.
I know I converted from them.
Yeah.
And to Tony's point, it's easy. The cores love to do things the way they always have, the past few decades, especially because they make a lot of money and the banking product at the end of the day stays the same. That's not an option in the future. And as that line becomes blurred, I'll lean into a little bit with Mark, but I still think that banks need to stick to their knitting, stay in their lane. As a community banker, I always wanted to have programmers and develop some really, really cool things, but I needed to focus on making sure that I was being compliant, making sure those regulators and examiners were going to be happy.
But those are all rules, right? and those rules are basically, you can embed those rules as code as you develop from the very. So it's a first principle approach, Steve. Right. So if you start with the human base and the effort to do so, versus do you start with the technology based, right? Hey, I'd like to build, right? I'd like to build X.
Yeah.
You and I were just talking about something the other day, and we'll talk about it here because it's on the record, right? And that discrete job is. I did research. There's a lot of people hiring for that thing.
Yeah. Look, I would challenge anybody that actually watches this far into this episode, any bank or anyone now. I think using the tools that I'm seeing between Tony, what you're talking about, and some of the other things, going out there. I now think I could build a digital twin of a bank's tech stack in 2 days. Mm-hmm. And we can start testing things back and forth in your little sandbox.
Yeah.
So we could build things internally in some ways, get it 80% of the way there.
That's right.
And then hand it off to someone on the front end to make it look pretty.
I think the fallacy for folks is to think that you have to have like a 1-for-1 twin. I'm a 80-20 guy, right? So if I'm a regulator coming in, I'm looking at your top 10 or 15 processes that actually drive 80%, right, of your risk, right? And so everyone thinks that you should start with trying to do the whole thing. I'm just trying to figure out the things that don't matter and then basically carve off the ends as outliers, right? And it's like, okay, cool. I'm center, back in my VU days, I would say that's called center of the plate.
Steve, was that Taylor Swift on your ringtone phone that just rang?
That was me.
Was that Taylor Swift? I thought I heard.
Yeah.
That was my.
Was that K-pop Demon Hunters? I was trying to figure out what song that was.
Yeah, that was my wife. Are you still on with?
It's a love story. Mark, just say yes. It's
yeah. It's a real story.
So I don't wholeheartedly disagree with you guys. I definitely think it's moving that direction. I point out that yes, you can put the regulations, you can code for that, but what environment do you code for in looking at regulation? Because what's being enforced today versus what was being enforced 2 years ago are not necessarily like there are some hard fast ones, yes, but then there's a lot of noise that tends to be cyclical and change.
Yeah.
So that's where the human piece is going to have to sit on top of the tech, and you can't just rely on tech.
Well, and that's why any bank or anybody fintech watching needs to hire both of you at the same time, because you're right. You're both right, but you're both wrong. I'm just saying that because
I don't know.
And but you have
right or wrong. See, I mean,
try to make this funny, right? A little bit.
I think one of the challenges is that we're faced with sort of a binary choice. You either are or you're not. If I were to start from zero today, why would I build it in the same way that's causing me the issue moving forward?
Yeah.
Right. And if anyone's really thinking about it, I mean, digital twins have been around a long time. I mean, there's a company in Seattle called SkyTap, and originally SkyTap was basically building dev labs, right? So you could test your assumptions.
Yeah, how long would it take them, right? Back then?
Sorry, I was in credit unions in 2016, and I was already trying to figure out how to build a small version of that just for something else.
It's like implementing your Salesforce. You think it's, and then like 4 years later, you're still like, what the?
But
Salesforce. Anybody's on Salesforce. I love Salesforce. I'm just saying, it's never as easy as you think, and it takes longer.
So I don't think the governance is really the main bottleneck. I think it's actually human, and I think the folks at the organization who are trying to make a decision, but they reference this stuff from their present as to apply to the future, right? And there's a great book out there called 10X. And one of the quotes from 10X is never let the past give permission to the future. Right. And it's a hard thing to release.
Yeah. But look, a lot of to speak for the people, but not speaking for the people, look, people don't want to take this risk on some of this tech stuff because they don't want to lose their job. At the end of the day, right. They've got mouths to feed.
Yeah. It's not their job they're going to lose.
Yeah. Playing it safe, and not leaning into building new or adopting new piece of tech is
I guess the question is like people it's a strategy or an initiative, right? Or a view. And you're right. What they're really risking, they're de-risking their job, but they're putting the future at risk.
Yeah. Well, and that comes to the CEO and the board. Yeah. That's on them to create a place where, their CTO can lean in without worrying about getting fired for choosing the wrong piece of tech and, learn how to start testing these things out in a way that, you're not going to get axed and have to go to the next place, right?
Well, that's a whole nother conversation.
Yeah, it is
aligning the incentives.
Yeah.
Because today, if I just said that if I were playing by the rules, I am not incented to do this.
Look, it's in every industry.
Optimize. I'm incentivized to minimize risk. And those are like, that's long time. There's that old saying, nobody loses their job by going with IBM. Like back, you know, and to Mark's point, that's
back in the day when I ran teams, is not that far away. I would always ask my team, so what's the PFC factor for that initiative? Okay. So everyone knows I'm good for acronyms. Steve, you get a try. What is PFC?
Don't. We got to keep this PG.
Yeah, I know. Let's go. Come on.
Who's? I'm not even gonna guess. I don't.
Okay.
Because I'm going to be wrong, and then I'm going to be so wrong. Everyone watching this and be like, "That guy has no idea what he's talking about."
You're far. So we would have, like, if it's a system, one system together, right? But when you had multiples of 3 and 3 different streams of data, it went on a scale from 1 to 5. Okay, and I go, "What's the PFC factor for that, fellas, right, and ladies?" And they go, "That's a 4." And PFC stands for pretty fucking complicated.
Oh, I was close. I almost had it. I thought it was pretty effing close.
And so when you have multiple
complicated,
right, you have 3 systems, 3 streams.
You got to bleep that out, though.
Then you have multiple departments, because you know that someone owns digital banking, but not everyone. Like, just look at the thing, and I'm just like telephony is PFC. That's got a high, like, I don't even need to see the discovery. I know it's got a PFC factor of 5. Right. Yeah. The challenge is today, everything has a high PFC factor because you're coming from a place where the foundation is basically not in the condition by which you can build on it.
Yeah, I mean,
I'm trying to
like, complexity is growing. I get it, and it's not like we're getting less things to do. We're getting better tools to do them with.
What did Pam post the other day? Something around this, right? The complexity.
That was, you can't scale.
We need to have her on because she's smarter than us. I'm like,
like, uncertainties don't scale. Is basically at the end of the day.
What did you say? I'm sorry.
Uncertainties don't scale.
Uncertainties,
we are coming up on time.
Okay.
So we'll have to plan more time for this. I don't know if the 3 of us can get together, be allowed in the same room. We'll see.
That'd be hot.
Before we go, though, I want each of you, who wants to go first? I'll let each take a side, and then I'll choose the one I like better, and that will be my stance. So, Mark, I'm going to let you go first. Credit cards should be capped at 10%.
Oh, 100%. I'm all for it. And I'm going to max out every credit card I have right now and go buy this land that I'm chasing after because it's 10%. Something will fill its shoes, right? Whatever's next. It's but you mentioned predatory early on. Look, people don't know how to play the game, or they get in bad spots for one reason or another, and then it just compounds. So I actually think it's great. We can all figure out another way to make up the yield somewhere else. But for now, I don't know if they're going about it this way is the right way to do it. But sorry, I think it's a good thing right now. But maybe Tony, you said it's incentivizing people to spend more, which might be dangerous.
Yeah. You're basically lowering the risk. At 22%, it's expensive.
It's expensive. I'm not
gonna. But at 10%, it's like, oh, that's a fair trade.
Yeah. My wife's gonna be out there like, what?
So who's that gonna? Okay, so interesting. who's that gonna impact? What's the adjacent impact?
I think
so. Wait, answer the question first, though. So I say yes.
Oh,
I say yes. So
what do you say?
Good or bad? Too much.
I'm sorry. What did you say yes to, Mark?
Mark said 10% is a good thing.
Well, I just view it as a thing, right? And that thing causes first, second, and third order, right, effects.
Oh, there's going to be some unknown unknowns popping up.
You start looking at payday lending and the title loads.
Yeah.
And
so there's again, it's about access, right?
What about all these HEAs that are out there going on right now? The HELOC competitor and equity, they're charging like 19% on, taking equity out of your house, these little new reverse mortgages. So what, is that capped at 10? People can be selling equity in their houses at 10%?
Well, let me ask Steve the question. Hey, Steve, do you think that the risk box, right? So we're talking about existing people who have cards. How does that affect people coming in? Do you think that gets narrowed? Do they?
Oh, yeah. I think if there is a 1 year's cap on what you can charge a risk profile, you're going to cut off any risk profile that's greater than 10%. Like you're only going to loan to people with the highest, the most trustworthy borrowers, and so that's going to cut off the rest of that access, and then they're going to have to go to the hard money lenders, to the payday lenders, to
buy now, pay later. Because
do you think they're going to get their credit cards canceled, or they're just not going to be able to open up a credit card?
I think
they're non-Q, like
coming up. I don't think they'll be able to cut off. They may pull that limit back. I don't know, but like the consumer can be negatively impacted at face value.
Can they reduce the limits? Like you're at 10%, but we're going to bring your limit down. Like you're an existing customer. I got a 19% card. Dude, oh great, 10% comes in, but you used to have 10,000. Now you're at 5,000.
I'd have to look at the. I'm not sure.
It's a pleasure.
You know, like American Express has the card without a limit, right? But like what they're gonna let you use that for, it's gonna depend on your track record, how much you have. Like there is a limit. They just don't tell you what that is.
Yeah. But the problem is the credit score, the credit bureaus are all so messed up. There's like, I don't know. This is for our next, let's just go into credit bureaus and how they're messing up the system. And it's ridiculous. So I think, maybe this is a step into fixing the whole system in some ways, but I do, like there's an unintended consequences. Like they can't get access to it. But if somebody's out there right now that has a boatload of credit card debt because of, they had to go have, their kid's appendix taken out or something like that, and now it's capped at 10% versus 26 or 30, then I'm all for it, So, and if it's only a year and it's a great experiment, like we'll come out of it and it'll either work or it didn't. So,
all right, that's Mark's trying to do the mic drop.
Boom. It's only because we're out of time.
Do you have any closing comments?
No, I'll cede my time to the Steve Bishop to close us up.
No, I think it's interesting. So many different factors go into it. The election year and the impact there. Like, what does that look like? Things that sound good at like just 10% cap. Yeah, it sounds great. And bankers, long time, they for overdraft fees, right? It's $30, whatever that magic number is. And people are like, oh, that's ridiculous. But if you're trying to get food for your family and you're 3 days from payday, I'll gladly pay that $30 so that my kids can eat at night. Like that's the justification for overdraft fees. Is it great? No, but does it solve the need? And I understand it going in. It does. So it may sound, things that sound good can have bad consequences. Things that sound bad can have good consequences.
Always.
No great answer. Anyways,
there should be a world where I can't make a payment that would drive me into overdrafts.
Well, no, but that flexibility is important, right? So it's and look, if that specific customer is not right for your platform, don't just kick them off, right? Don't just shut off their credit card or kick them off. There's got to be something in the system where we can move them to somewhere else that's willing to take that risk and be that more flexible. And that's why going back, there's all sorts of flavors of ice cream. We just need to make sure we got, I don't know, ice cream. You know, just get the people.
Country's best yogurt. We got to.
Yeah.
You remember Skip-a-Pay? Remember there are a number of offering Skip-a-Pay. So I'll hold the names to.
When you edit this, you can cut this off at any point. But
Yeah, Skip-a-Pay was you can pay
way over time. So.
to skip a payment, right?
Yeah.
Yeah. So there was a place I was at, and we were going through a thing, and they and let's just say the folks doing the inspection said, you must be in predatory lending because your Skip-a-Pay is off the chart. So let me fast forward. So we did an analysis, and everyone who was using it had the capacity to pay their bills.
Yeah.
They were using it as a financial instrument.
Yeah.
Right. We got to stop it. I can't stop it because they qualified to do it. Like, what do you want me to do? No one.
Yeah.
So the people who really need it.
Yeah. Well, at the end of the day, I think you're spot on, Tony and Mark. It's people will. There are financial tools that people don't even think of and using, whether that's skip a payment, whether it's that rebate from the hardware store, like Menards, or like whatever that cash is, your Kohl's Cash. Like, there are financial tools that aren't part of the traditional banking system that get used every day. And guys, next time we're going to schedule about 5 hours for this.
Do we get the
do like a Netflix show and you just binge watch us. Everybody's like, oh, what are they gonna? Yeah.
All right, well, guys, this has been a blast. Mark, Tony, thank you so much. Until next time.
Thanks for getting.
All right, thanks, guys.
Yeah.
Cheers.